I bet you all good morning, good evening, good night, wherever you may be watching this transmission. It is I, Mike Martins. Thanks for joining me, guys. Lots of love out there. Spread the love, guys. Spread the joy. We need to be tough. We need to be positive in times, just in times like this. And this was posted, was it 2 days ago? It was sent to me by several people. And sorry, guys, I fell behind the last couple of days on videos. I've been covering the CV outbreak, so 375 Canadians a day went insolvent last year, the most since the financial crisis. So 375 Canadians a day went insolvent last year. So let's take out our trusty calculator here and get a little bit better numbers here. Let's see, 375 times 365. Wow, 136,875 Canadians went insolvent last year. Wow. So let's multiply that, about 16K in debt each. It's about 16,000 in debt each of them, like on average. 2,190,000,000. Yeah, 2,190,000,000 down the toilet. Insolvencies and people taking on debt they can't. A lot of people that take on more and more debt or take on debt usually need credit counseling, period. If you can't afford to buy it, don't buy it, right? Do your research, guys. Make sure you know what you're getting into when you're signing on the dotted line. Because now they want to move you know how it takes 8 years to recover your credits and all that stuff. Well, they want to move it to 12 years. So you got a good portion of your life removed from trying to reestablish your credit. So it's really tough, man. Remember, and remember, a lot of people are playing the catch-up game. Okay, so people are playing the catch-up game where wages haven't kept up. Wages haven't kept up to the rise of the cost of things, right? And wages haven't kept up to anything. And the problem with wages not going up, it makes it harder and harder for people to play. They play the catch-up game, and then when they got to buy food, well, I'm buying food with my credit card. It's not like I'm spending it, Mike. Mike, I'm not spending my credit card and buying a motorcycle or something dumb, that I don't really need. I'm actually buying food with my credit card, and that's how bad it's getting in Canada, where people have to start putting food on credit. Personal insolvencies in Canada increased the last year to the highest level and the fastest rate since the financial crisis, while businesses' insolvencies rose for the first time in nearly 2 decades. Government figures show 2 decades. The Office of Superintendent of Bankruptcy reported Monday 137,178 Canadians filed for bankruptcy or modified repayment terms with creditors last year, a 9.5% increase over 2018. It marked the most filings since 151,712 in 2009, and the quickest annual increase since then, the office said. The pace amount of 375 people a day seeking financial protection or debt restructuring, the statistics show. The growth in consumer insolvencies and accelerating insolvencies rate is a symptom of a bigger problem. Guys, this is dangerous, guys. Please pay attention to what you're doing. Pay attention to what you're spending. Pay attention to what you're consuming. Guys, please. We're headed to a really... Look at 2020. Look at 2020. We got the CV going on, breaking out. A lot of people getting sick. We got the massive fires in Australia. We got in the UK, we got more in the city of London, we have more food banks than there are McDonald's. We got in Canada, I don't even know where to start because it's so bad. It's phenomenal. It's really dangerous territory we're headed towards. And I'm not trying to be all gloom and doom Mike here and scare people. I want people to wake up and start understanding credit, start understanding revolving debt, blended rates, and what they're actually paying out in the end. The growth in consumer insolvencies and the accelerating insolvencies rate is a symptom of a bigger problem. A board member of the Canadian Association of Insolvencies Restructuring Professionals said in a statement, many who have amassed unmanageable debt have no path out because people aren't getting more at work. People, again, this is just a little bit of a tidbit of information that is giving you an indication that basically people aren't making enough to live. And if a lot of these people wholeheartedly, right, honestly are using credit to buy food, then we are in a lot of trouble, okay? Businesses, insolvencies, and debt restructuring proposals rose 2.8% last year for the first time increase since 2001, driven by 75% increases in mining, oil, gas industry failures. The office said the sector had 42 companies under duress last year compared with 24 in 2018, the data shows. So remember, there's a lot of people losing their jobs, losing their jobs, and in turn having to file for bankruptcy. Well, people losing their jobs, that's a bad sign of an economy when we have more our public sector jobs are growing faster than our private sector, and the private sector funds the public sector or government jobs or whatever you want to call it. That's not good. Where is your money going? Try the 30-day budget to rein in your spending. So let's look at this here real quick. Let's see what this thing is. Okay, so it's just a video here. Pay attention to your money in hundreds, maybe even thousands of dollars a year. Yeah. The impact could reduce capital spending and more fringes. More firings. Sorry, fringes. Sorry, I'm just... yeah, more firings. You know what? I don't like to say firing. Firing was more dismissals, more unemployment. Not firings. People shouldn't be getting fired because their employer is having a tough time, or the cost of operating a business because of federal costs, paying the federal government basically, and provincial government and municipal governments isn't feasible. You shouldn't be firing. It should be laying off or dismissing people, because more firings, no, it's more frings, okay? Which will then be felt by more consumers seeking financial protection. In turn, consumers under heavy debt may cut spending, threatening some businesses. Bulldog pinned the jump to bankruptcies and interest rate hikes from 2016 to 2018, noting there's a 2 to 3 year gap of the impact felt by the number of insolvencies as consumers struggle to contend with higher payments on items such as mortgages, credit cards before they're overwhelmed. But they have to raise interest rates to combat inflation. We went over this a quadrillion times on the channel. We need to fix this problem, right? Ontario had the most personal bankruptcy and debt restructuring applications last year with 44,852. The 15.4% increase over 2018 was the steepest in the country. Newfoundland and Labrador followed with 15% rise to 3,221. Quebec had the second highest numbers at 42,865, but a shallow increase as 2.7% statistics shows. Alberta had the third highest amount in increase with the 11.6% climb to 16,675 personal applications, the office said. In business, the other sector besides mining, oil, gas showed to hit information cultural industries with 27% jump, 80 businesses, insolvencies 21.7% in the wholesale trade, and 191 failures, and a 14.7% rise in arts, entertainment, and recreation business flops to 78. The statistics show we are seeing an upward trend that likely extended into the last year. Jerry Lewis, an Alberta-based board member who specializes in corporate insolvency, said in the statement that increases are reflective of the headwinds faced by a variety of industries in Canada. Manitoba's 39.3% gain over 2018 showed the increase in business insolvencies at 39, while British Columbia's tally rose to 23.3% to 127, according to the government figures. Alberta's amount rose 8.3% to 223, while Ontario bucked up a national trend of 3.7% decline, 902 cases, the data showed. Businesses may begin addressing financial pressure by cutting discretionary expenses, reducing capital investment. Lewis said, for some, this will include reducing payroll costs and will ultimately drive consumer insolvencies up as well. Guys, be careful because remember, guys, a lot of people, what was that article? Canadians, there was an article we had up a couple of times. Canadians, is it 400? Or 280, was it $283 away? Was it away from bankruptcies? From... There you go. There's an older article I covered here on the channel. 46% of Canadians are $200 or less away from financial insolvency. So half the country is basically in peril when it comes to their finances, right? The number of Canadians who are $200 or less away from financial insolvencies at month's end has jumped to 46%, up 40% from the previous quarter as interest rates rise, according to a new poll. A survey conducted for insolvency firm MNP Lot in December also found that 31% of Canadians say they don't make enough to cover the bills and debt payments, up 7% from the September poll. So, see, many have very little wiggle room that an increase in living and costs or interest payments can tip them over the edge. Now, here's the problem. They're trying so hard to suppress the negative, to start trending towards negative interest rates, and that is a very dangerous territory to head towards. Very dangerous territory to give, to put yourself in that, predicament is a very tough. It's treading water. A lot of people are treading water and keeping their head above water. But like I said, we got to stay positive. We got to really, really, really start like micromanaging our own finances and starting to get help when we need it from friends and other people to understand what they've been doing wrong. Because if you're not told what you've been doing wrong financially, you're going to keep repeating the same mistake over and over and over again. Amen. Anyways, guys, Mike Martins here signing out. Guys, don't forget to join the channel. Buy a t-shirt or a mug on Teespring and just be a part of the channel any way possible. Share a video. We got the CV coverage here. If you guys want to watch anything about the CV coverage, we got it here on the channel. And tomorrow, trends in the housing market. Don't forget to join us. Thanks for watching, guys, and have yourselves a great Tuesday.